Johnny's got something for me. I know he does.
Yeah.
In 3, 2, 1.
Welcome, everybody, to another episode where we dive into financial mastery, financial literacy, mortgages, entrepreneurship, and sometimes we got guests. So kick back, tune in, level up. This is On the Couch podcast with Danny and Johnny, where real talk meets real results.
Save that. That's good. That one's good.
Set off the fireworks.
Baby. I'm Johnny Supa, and I'm here with...
Danny Cardozo.
Holy smokes, what a year it's been, bro.
We're pretty much there.
Yeah.
Yeah.
This is, I think, if I'm not mistaken, 51, 52. So technically it's 1 year with Stefano. So
Hello, Stefano.
shout out to
It
Stefano.
has been a ride. It has
Through the
been a
lens.
ride through the lens, through
Did we
tequila.
really start before Christmas? Like, I feel like we started
For 50.
way before that.
We are pretty on par with the 1 year mark. It's
That's
it's a week
crazy.
on, a week off, something like that. It's been a while.
So I watch a lot of I listen to a lot of podcasts to say, not watch, but a lot of them is like they film today and then 3 weeks they film another one.
Yeah.
And then maybe a month or month and a half, 2-3 months later they film another one. And it's like there's no consistency.
That's
And
right.
like I'm very proud of us.
We're
Yeah.
very good. We're
This
very
has been a commitment. It's been a minute. But you know what? I'm actually very pleased to say it's been we're 52 episodes in, man. We're doing pretty cool. We appreciate all the love and the comments from everybody. I mean, we walk into rooms, people recognize us, and they're saying things like, "Hey, you're on the couch. You're Danny. You're Johnny."
That's
So
right.
people are recognizing us. To all the other people that are out there, please continue to show support. Obviously, we're not looking to become celebrities, but I think the whole point of this is to share the knowledge and our input and our experiences and what's happening in the market. So, yeah.
And I think it's very important for people to know that if they're going to tune into On the Couch, we also have guests that are not just mortgage related.
No.
We have everyone from everything, and I always take away something from each episode.
Yeah, I tried getting to somebody the other day, reaching out to Jimmy, and he's like, I appreciate the invite, but what am I going to do? And sit on the couch and talk about what? So on your behalf, I'll just talk on your behalf. And then, I think a lot of what I say and the things I do and the actions are because of the things that Jim taught me. So thank you, Jimmy. If you're not going to be on the couch, I'll just put a shout out to you and who you've been to me. You've been an inspiration, that's for sure. And thank you for all I'm going to call them little tidbits that you've given me over
Timbits? The ones from Tim Hortons?
Not the Timbits. The Timbits come from everybody else. But all the tidbits you've given me throughout the years. Thank you. Continue doing what you're doing. Man, this guy, his mantra, I love it. We work hard making it look easy.
Good.
And so that's been his mantra, obviously along some other great mantras, but keep doing what you're doing, guys. Shout out to Maple Volkswagen, Milton Volkswagen, and I think it's coming spring 2025, will be Stouffville Volkswagen. Guys, these guys don't disappoint, so thank you very much. I just want to put a
Beautiful
quick
little
plug.
plug. Now,
Yeah.
Danny, let's get down to business. So you have a lot of things on your mind. What is happening?
What is happening?
There's so many
guys.
changes.
It's just like because of all these changes, I'm still doing research and we still don't know everything about the changes that are happening. But I mean, the one that we have recently learned about is the November 21st, which has just passed. And that is you are now able to switch your mortgage from one lender to another without being stress tested.
So is that similar to being grandfathered, like then from before?
Pretty much.
Same idea, right? But
Same
now it just applies to
exactly.
everybody across the board. So whether you were prior 2019,
Whether you're insured, insurable,
conventional,
or uninsured.
yeah. So, but prior to this, it was okay. So if I had a mortgage that I got into prior to, right, let's say 2018, 2019, and then I renewed, and then I want to switch my mortgage somewhere else because my inception date was prior to, I can grandfather, no stress test.
Right. So it was 2016.
Or 2016, sorry. Yeah. So now what they've done is they've changed that. They made that for everybody. So if you got a mortgage in 21, 22, 23.
Yeah, at some point they just made it for if you were insured for a little part, I think for the last year.
Yep.
I don't quite remember exactly when that started, but if you had an insured product, you were able to switch that product without being stressed. Now it's everybody, whether you're insured, insurable, or uninsured.
So what does that mean for people that have a mortgage? That they're, because the numbers say, okay, these are true facts. I don't know the exact to the penny, but there's $350 billion in renewals coming up over the next 24 months, 18 months. 64% of that is coming up in 2025, which is what we're entering. So they're making this a level playing field all across the board.
Right. So now if you have a mortgage that is up for renewal,
Yeah.
you now have the ability to shop it around. I mean, you've always had the ability to shop it around,
But you have
but you weren't able to.
So why does somebody want to do that? Because there is stress to it, regardless of the qualifying rate still being there, which we'll dive into. We'll explain what all this means. But that's not there anymore. But there is a process, right? Like, so why does Johnny want to go through the whole hurdle of not just renewing where I'm at? Because to renew is simple, right? I can just
Right. So I mean, prior to when you'd get your renewal letter,
Yep.
right?
Yep.
They would give you a rate.
Correct.
And that rate is usually higher than if you were to shop it around. But stats say that 70% of people, they don't shop around
No, they
because
stay.
it's that much easier just to sign on the dotted line.
So is that not tough for a lender? Because like I'm all about retention, right? So if I'm the lender, so I'm X bank. I got Danny and his wife. I've got their mortgage. I'm offering them, let's just use 4%. Renewal comes up, I'm going to offer them 3.99. I need to retain that debt tower, right? As they call it.
Yep.
I need to retain that business.
So lenders are now going to look at it as one of two ways. They're either going to retain the renewal or they're going to retain the new client.
So now there's new business coming in.
Yep.
Or renewal.
Renewal.
But the cost of acquisition, right, for a lender is expensive.
Right.
Because if they're not usually making money first term.
Right. So that's why they would, when it's time for renewal, their rates would be slightly higher. They know that 70% of the people are just going to renew anyways,
Yeah.
and not go look at a new lender. Where now things might turn around because now they're obviously easier to qualify, right?
Yep.
Even though the rates are higher, you're not being stressed at like you were to get that mortgage. So it'll be a lot easier to qualify, right? So it'll give the borrower an opportunity to switch. And
But it's tough though, because I mean it's tough, but it's easier because it's tough to switch because you got to go through the whole process, right? You got to collect all documents. You still got to do an appraisal, maybe not 99% of the time, but majority of the time you're probably doing an appraisal if it's not a desktop appraisal or AVM. So that's still going to have to come in effect. But
so truly, if you ask me, I know everybody is saying go and attack this new, for the next year, the new amount of mortgages we're all going to be doing for switches. I think a lot of people are going to be looking into it and eventually just not doing anything. Because as you say, retention for these lenders, the reality is these lenders are going to lower their rates to keep the clients now, where before they didn't have to, right? So it's like I'm either going to lose trying to get the new client or I'm going to lose to keep the client.
I don't know about that though, because we think that because that would be the optimal thing to do. Don't offer a shitty rate at renewal. Give a great rate. You don't got to worry about retention going after the client, trying to retain the client because they're asking for buyouts. Because if they're asking for a buyout, obviously they're shopping.
Yeah.
Right. So now but they don't know what the cost of acquisition is to bring in the new clients because you still have the salespeople working for you, right? Your marketing, your branding is all working for you still. So you're driving traffic in your marketing paths to your front door. So if you're not upping your marketing dollars and the traffic is coming in because you've got 70% of the business is out there for renewal in the next 18 months, are you putting the money into marketing? Or are you putting the money in the acquisition costs are not going to be there. So we're going to have to see what happens.
Yes.
But
I truly think it is going to create a lot of actions for mortgage brokers.
I think our costs are going to go up.
Our costs are definitely going to go up as mortgage brokers because we're going to be spending a lot more time with a lot more clients, right? And then I hate to say this, but I'm really scared that the reality is most of them are just going to sign again with their banks. But at least these clients have options. It gives you the opportunity to build rapport with them.
I'm gonna say I don't believe that.
Okay. I hope that you're right and I'm wrong.
I'm gonna tell you why I think I'm right.
Let's go, man.
Okay. I'm gonna say this for the record right now that we're gonna absolutely dominate because I'll give you coming from the business I was in. When you have a cycle of business, you drive a Mazda and you want to change. Everybody wants change. Everybody wants change. I'm truly a big believer that people want change. Some people like consistency in the same, so they're just going to go sign a new lease at the same dealer. Other people want new products. They want new terms. They want new gimmicks. They want new services. If you're out there and you're going for a renewal and you don't have somebody in your corner working on your behalf on how to exit the mortgage, then you're making a mistake. You need that financial advisor in the background, right? Which is what we pride ourselves on. So if we offer you new service and we offer you new strategies and we offer you new products and new privileges, why wouldn't you want to have somebody like that in your corner? So if we sell that, then I don't think we will be spinning our wheels. Right. But I think our business will increase, but our costs will too, because you're going to have more assistance, right? If you're high volume like we are, you're going to have more assistance, a lot more credit pulls. Credit pulls are not free. They cost us $10 a piece almost every time you pull someone's credit. Yep. And that doesn't get shared with anybody other than us. And then because the business is out there, our acquisition, so our marketing spends are going to increase because we want to drive that traffic to who we are. So it's going to be a tricky ride, man, I think.
What happened to all the people that, like me, that were renewing in November? What happened to all those people? Where did they go? Did they just hit that automatic renewal button that Danny was talking about?
Some of them did. A lot of them shopped because the stress test was still in play.
Yeah.
But
here's what happened was before is like, because the stress test was in play and rates have gone up, they don't qualify to go anywhere.
So they most
That's
likely
the
renewed.
reality. So it's easy for them just to stick around, sign the document, right? Now that the stress test is out, they are renewing actually lower than they were actually stressed, possibly lower than what they were actually stressed when they actually got the mortgage.
So
at 5.25.
So year over year, when the banks are coming out with their statistics and they're saying 70% of our business, our book of business is renewing, is that because the stress test was in play and the life changed? Because when Stefano and his wife first got the application, they were both full-time employees. They didn't have no kids. Expenses were a lot less. Life's got more expensive. They've incurred more liabilities because they got 2 car payments now, but now she's on mat leave, or whose life's changed.
That's right.
He went from being a salaried employee to now being an entrepreneur.
This is exactly what happened. He's saving my life right now.
But you're not the only one. This is all of us.
So how to retain these clients?
But the bank and the government, right? They're saying my retention is at 70%, but all you got to do to renew is you don't got to prove your qualifications anymore.
Right.
You just hit renew and go. So most people did, and that's why the retention on renewal is at 70%.
Right.
But now you open the gates, the handcuffs are off, your lifestyle has changed, but also you're qualifying at contract rate. You're not qualifying at the stressed rate.
But where do we win with these clients?
I don't know.
I'm going to tell you how we win with these clients. We win by what you just brought up.
The servicing.
What?
The servicing.
Yeah. Let's talk about how your last 5 years have been.
Yeah.
What are your liabilities like? Would cheaper payments be easier for you moving forward, right?
Yeah.
And actually refinancing the product opposed to renewing the product might actually be what keeps them around.
It's already happening now with the clients that don't even have the liabilities, because they're coming to me saying, Johnny, I got my first mortgage insured 25 years.
Yeah.
My renewal's coming up. Now my amortization is on 20 years. But 5 years ago, I was paying 2.7. Now I'm paying 4.4, 4.1, let's just say best rate out there.
Yep.
As a matter of fact, it just came out today, 6-month, 4.1. 3 year. Or 4 year, 5 year, sorry. 5 year, 4.4. Anyways.
Give me that. Yeah.
Neil has it. Cool. So they come out now and they're saying, well, my life has changed a little bit. My $400,000 mortgage that I was paying $2,000 a month for is now becoming $3,000 on 20-year amortization. So they're already asking before we're taking any liabilities away to give me a longer amortization to bring my payments down. We're already doing that. Now you're opening. Now it's going to change though, because if you do that, the stress test goes in play. Correct?
Yes. If we look to refinance their mortgage to make payments easier for them,
I got to stress them.
now we have to stress them.
So if you're out there, right? So just to touch on this quickly, a switch and renewal or transfer is you take the exact same term and you're just taking it from bank A to bank B. Nothing changes.
You can add $3,000.
Yeah, up to $3,000. Yeah, to cover any legal fees or stuff like that. But most part, any new business at any new bank is covered by FCT or FNF. So there's no legal fees to the clients. So I just want to be clear that people that are out there, it doesn't cost anything to move your mortgage, other than call it the tediousness of collecting documents. Other than that, it doesn't cost you anything. So there's no legal fees. There's no transfer fees. Maybe an appraisal, but for the most part, it's covered by the lender, or it'll be covered by us.
Yep.
So that's not in play. But if you have 18 years remaining, you're going 18 years at the new bank.
Right.
If you have 400,000, you're only moving 400 plus or minus $3,000. So if you have liabilities in your life, like car payments, consumer credit, you can't put that into that same non-stress test rule. Now you're going into a refinance,
Right.
trying to lower your overall increase cash flow, lower payments, right?
Yep.
But now you're taking that and you're stress testing it. So it changes a lot of the dynamics that you're going to be looking at. So
What about those people that say, well, if I come to you guys opposed to the bank, aren't I paying a much higher fee with you guys since you're private lenders?
we're not private.
Not private lenders,
Yeah.
but you're like B lenders.
No, not necessarily. I mean,
Well, I mean,
You're not classified as B lenders?
no.
We are brokers, and we work with everybody. We work with your brick and mortar banks, and we work with your monoline banks, which are all on the A side, all giving just competitive rates like anybody else.
A lot of people use so many analogies, right? So think of us as an insurance broker. Think of us as a walk-in clinic. You don't got to go to the hospital to get checked up. You can walk into the walk-in clinic, and we're certified doctors for the finance mortgage business. The exact same thing. The same diagnosis, right? Maybe different experience because the characters are different, but other than that, the same products are available to you. So whether you're going to look for a car insurance and the broker goes and finds you the best rate, whether you go into, the only difference is you're just not walking into one brick and mortar store. You're not making multiple branch visits and doing hours of online research. You're coming to one in particular professional who's got access to all the lenders, all the products, the programs that best suit you.
You know what one person actually told me? You know those guys that you work with at your Nesta, are they like a debt consolidators? Like do they act like debt consolidators? I'm like, no, they don't.
Well, we do in a way.
In a way, but
so there's
not
two
your title.
Well, no, there's two types of debt consolidators that are out there. Okay. There's a trustee and then there's mortgage brokers. Even your bank, a financial advisor can be a debt consolidator, right? I know FAs that are out there that'll take, someone's consumer debt and then they'll incorporate it into their investments, and then just pay off the debt. I've seen brick and mortar banks use the mortgage, the home equity, because it's cheaper to borrow the money. Like why pay consumer interest at 19.99% on a credit card or 11% on an unsecured line of credit when you can get a mortgage at 4%?
On an unsecured line of credit, what would it's double the rate, right?
Unsecured is probably prime plus 2, prime plus 3, right? So you're right now, I think what puts prime 595. So 595 plus 3, so you're at 895, right? So that's 9%.
That's a lot.
It is. And that's interest only, bare minimum payments, right? So you're just coasting through the payments. If you're on a credit card, it could be anywhere from 19% to 29%, 35%.
So the one thing I want to do.
So we are debt consolidators. If you own a home.
If you own a home.
We're not debt consolidators if you just have nothing out there. We're
credit cards and stuff.
Those are trustees.
Gotcha.
And those people are professionals in what they do. Somebody's drilling with a hammer drill next door.
That's okay.
But then there's lawyers that we know and we work with that do debt consolidated. They'll go out there and they act on your behalf and they'll call whoever the lender is and they'll negotiate a settlement on your behalf. So there's many different facets for debt consolidation. We debt consolidate using equity.
Okay. So 2024 is loosening itself up on stress. Clearly, that's the whole purpose. They're making it easier for people to buy a home, have a mortgage.
Yeah, there's more rules that we need to talk about that change. Like that was just one.
That's just one. And
And Danny's got a couple other ones that you're talking about that are going to make home buying easier.
There you go. That's the one.
Yep.
yeah, so as of December 15th, coming up in the next week, we got
Or when you see this is already a past.
either or.
Yeah.
The federal government is expanding eligibility for 30-year amortization for insured mortgages for first-time home buyers and all purchasers of all new home builds. So if you're a first-time home buyer, you now have the opportunity to take advantage of not 25-year amortization, but moving it to 30-year amortization, lowering your payments, making it easy to get qualified. And for anybody purchasing a new home build,
And they
same
can,
rules will apply. This reduces monthly payments, increases borrowers' affordability.
yeah.
Also happening December 15th is you'll be able to increase mortgages from 1 million price cap to 1.5 price cap.
Yeah, these are some
That's
significant.
huge. That's huge.
And that is for all insured mortgages.
It is. So what they're saying is, so the rules are as follows. And again, correct me if I'm incorrect. From 0 to 500,000 is 5%. So that's 25,000. And then from 500,000 up to 1.5 million is required minimum 10%.
10%.
So on the remaining 1 million is another 100,000. So the minimum down payment on 1.5 million is $125,000.
Which is much better than the
20% required that was before, which would have been
almost
200
If
300,000.
you've gone over the 1 million.
if you
mark.
went over, yeah.
Which most people do because the average mortgage,
The average
So-
house, yeah.
the average
so-
house, yeah.
Here in Toronto Vancouver, and maybe a couple other smaller cities are going to take most advantage of this product.
Yeah.
Would Toronto, the GTA, all that take advantage of that?
I think so because the average home price, right? So freehold,
Freehold is a
Freehold
lot
is-
higher.
is a lot higher
but
than anywhere else.
income in Toronto is also higher to be able to qualify for these mortgages.
Ah,
so Toronto will benefit,
Okay. They also take your income into account, right?
of course. Yeah.
So what would that threshold be?
So they say the average how to qualify for that kind of mortgage, put in
Right.
$125,000, you need about I would say 250K.
Wow.
Four. So whatever the amount is, divide it by 4 if you want to be on the safe side. So if you make 100,000 times that by 4, you qualify for 400,000 independently with no liabilities.
With no liabilities.
Yeah.
Okay.
Yeah, you can almost push that number a little
4.5.
bit. 4.5. I mean, as rates drop, you might be able to get a little bit higher than 4. But then again, you have no liability, so that's.
But who doesn't have a
keep that
liability? Unless you're living downtown Toronto and you're cycling to work or you're taking transportation or you've got a car paid for. Majority of the people have. So if you're a first-time home buyer, you're coming out of school, you probably got school debt or student loans. Not all of them have to be serviced. Some of them don't be, depending on where you are in the process of student loan. But at the very minimum, it's 4x your income. So if you're 2 people making $100,000 each, that's $800,000 as a mortgage.
Ah, I see.
Simple math, simple calculation.
I do quick math when someone's talking to me. Okay, what's your income? I already know that like
1
where
plus
you're gonna
1
be
equals
at.
2.
Exactly.
Yeah,
So,
yeah.
like, and then after we can do all the numbers and get a better understanding. But
like we talked about in the other episodes, like if you're not qualifying the client, that you're wasting their time, right? That's why they come to professionals like us. It's like, well, I make 100,000, but I'm looking for 700K. Then not that they don't qualify, the conversation changes, right, Danny? Because if you got 20%, then you can go to the alternative lender, which is not B, it's not A. There's like the one right in between. A true B is for people with bruised credit and challenges. Somebody who's got 20% down buying an $800,000 home, which exists, they might not qualify at the 4 times your income. We have to stretch that a little bit, and then that's where brokers come in.
I love when I get a client that initially has gone to the bank, and when I got to do the discovery call with them, my first question is to them, have you gone and spoken to your bank or any other professional? Because when they say yes, I already know that they've been qualified or pre-qualified at a certain amount. and I can already know I could probably do a lot better than that.
Because the banks are very strict.
Very strict.
Some banks are, yes. Like their guidelines.
Like the 5 major banks.
The 5 major ones are very strict. Yeah, especially if you're verified or non-verified income. Right? If you're in business for yourself, good luck.
Good luck.
Yeah, very
So,
difficult.
If you're an entrepreneur, good luck. Well, I mean, no. There's ways.
There's options.
There's options.
100% there's
but
options.
it's clearly a more difficult road.
Yeah.
Okay.
Yeah. And then if you're putting down less, there's so many variables. That's why contacting a professional who does this every single day.
So
all day.
basically, what On the Couch is it's like Cliff Notes. It's like we're giving them the general idea, but for them to get detailed ideas, they have to come in.
There's not even that. There's so much that we know in the background that is not shared on video or in
Exactly.
public. Like it's, like in any business, like they don't know how to mix.
That's right.
Right. Like you can come here and record, but you don't know how to mix, edit,
That's right.
and get rid of the dead air and get rid of
That's right.
noise cancellation. They don't know all those tricks, but we do.
That's right.
Like you do, right?
That's
Like,
right, exactly.
Same idea in this business. We
And
know
it's
the
case by
behind.
case too.
I've
mean,
never had the same file twice.
Never.
No, no, never.
Have you guys
just finishing
one
up-
second before you actually get it? Have you guys ever dealt with a client that has done multiple homes with you? That you've started them off in a bad situation, got a home, then all of a sudden they're in a better situation, got another home.
I got 2 clients that are almost mortgage free.
Oh,
Yeah, so
Love it.
huge,
that's where I pride myself on that. Yeah,
huge. Okay.
and that's not often. That's very hard to accomplish. But I've got
And I hope that makes like one of our Instagram
milestones.
posts for this video, because I love to see how critics start talking. It's impossible to be mortgage free. How is this possible? Guys, we got strategies to make you mortgage free in 10 years.
Yes, yeah. If you just you got to be disciplined.
Say that again.
We have strategies to make you mortgage free in 10 years.
And have multiple properties at the same time too.
And
Yeah.
I am almost there to prove it that it's been done with myself. So
Oh, mic drop. So that's going on Instagram. So Danny, you said you had one more piece of information, or are you done?
I do. So coming in January 2025,
Some more for you fellas out there.
homeowners will be able to refinance their insured mortgages to access equity in their homes and help pay for the construction of a secondary suite. This will add much needed gentle density to our neighborhoods and help tackle the housing shortage.
So this one I need help with, Danny, because you got to explain.
Wow.
You got to
So-
explain this one to me. Because are these garden suites?
So,
Or is this like finish my
is-
basement?
This is any secondary suite. So if you want to finish my basement and make it a legal
Okay.
suite,
Okay.
and I'm going to say legal because a lot of people do, basement apartments, not legally.
So when you say not legally, they're not registering it with the town.
They're not registering with the town or city.
Okay.
Right?
don't have
They're
a permit
legal.
for it.
They're legal. They didn't get their permits
Correct.
to do it. They're legal. They're built proper.
Yeah.
Just without permits.
So does that impact people when they want to qualify for a mortgage if they have a legal or non-legal basement apartment?
Does that help them qualify for a mortgage if
Yeah.
they have a
Legal or non-legal?
non-legal?
Yeah.
Huh.
Well, non-legal means it's not registered, so
Yes,
they can't
It's
put it
not
towards their
registered.
income.
So I mean, we've ran into bumps on the road. I'm going to say where
A lender
the-
questions
the lender questions
the appraisal.
the appraisal that mentions this is not a legal unit,
Yeah.
but is built legally.
So then, how would that work? If
So
not-
I mean, it's just like what we talked about in the background, the last episode about things happening in the background that borrowers don't understand, right? Or don't even see. We run into again bumps on the road that cause a lot of
An inexperienced agent will have that deal blow up.
yeah.
An experienced agent like us will know that 99% of the time it's not a registered legal duplex. And if it's not a registered legal duplex, we know that we need to do certain, not that anything's wrong, you don't go to the one lender or the other lender.
We'll focus somewhere else or whatever the case is. But
interesting.
Yes.
Anything else, Danny?
so what the only I mean, we still don't have full details on this.
Yeah, this one I'm like the whole garden suite.
It does mention that we'll be able to refinance their insured mortgages, but I'm pretty sure this is wrong. It's not that they have an insured mortgage and now they can refinance it. I'm going to say that everybody will have the opportunity to do that, and the insurer will back it up.
So just like the multi-unit CMHC thing that they have,
pretty much,
which we should talk about on another episode.
We definitely need to do a whole episode on the MLI program,
which is coming up.
Sure. Which is great. Yeah. Nobody knows about it.
No,
we'll leave that for another one.
We've got them coming into the office to explain it to us in thorough.
Good.
In thorough.
I've had a lot of people actually come up to me and ask me about this secondary suite and refinancing, and I see older people bringing it up. I can do this for my son or my daughter.
Yeah.
Right. They don't need to move out. They can now move out in my backyard.
Yeah, I could build my son a house on my property.
Guys, let me tell you, you probably can do that right now. You don't need this program to do that. If you're able to re-qualify yourself for
or sever the property that way.
Right?
Yeah.
The city will allow this because the government's forcing it on the city to.
So getting the permit would be easier.
Would be a lot easier now, right?
Yeah.
Chances are you don't need an insured mortgage to make this happen, but for those who might.
So is that something that we should maybe look like as housing becomes unaffordable, because it is. Mm-hmm. So a lot of the downtown homes that have laneways,
right? A
lot of the people are turning their garages into now garden suites.
So now you can do garages and you can do garden suites. So you can actually do both in one property.
So it becomes a duplex? No, not a duplex.
Triplex.
You just can't have more than 4
on that particular.
On one particular
which is called
property.
A quadplex, right?
Well,
isn't it called a quadplex? Because it's 4 dwellings in one location.
I think that's like.
I think it's a fourplex.
Fourplex.
Yeah.
It would be a fourplex.
Yeah.
But a fourplex is considered one building, right? And it's registered, has all separate entrances.
Oh, I see.
A little bit different.
A little bit different.
That's what you're.
Yeah.
That's
These are suites.
Okay.
They're off. They're not attached, right?
Yeah. Or your basement
they are
is a
attached.
suite too.
If it's a garage, the garage has to be detached.
Yeah.
From
So
the house?
it's more in Toronto because Toronto has
okay.
laneways. Laneways, their garages are detached from their homes,
And they're considered
and they're
garden
usually
suites.
behind.
Right.
And a garden suite would be in your garden. A little bit different. So you got laneway
That's
suites.
the name. That's the name.
So you got laneway suites, which is you're actually using your garage
To turn into an
actual apartment or a suite.
studio or whatever you want to call
Exactly.
it. Yeah.
And then you got your garden, which is your
There you go, guys.
garden suite, you could say, where you can actually build an actual suite in your garden.
So you have your house, your garden, turned into a garden suite, and then your garage, laneway into a laneway suite.
Right. So you can have your house. That house, you could have your main.
So you say it's like Uncle Phil and Will. So Will
the
lives in
pool
the
house.
pool house,
Yeah.
right? Because it's
Right,
by the
yeah,
pool.
yeah,
And then
exactly.
you got Uncle Phil living in the house. So Will can go inside and have breakfast, but bring his ladies to the.
And then you have the
That's crazy.
the butler that lives in the basement suite, right?
That's right.
Yeah.
Yeah.
Right. And then you have an outdoor person that lives in the laneway. So
essentially, yeah. But that's still
The un-
classified as one house, right? If you have that,
you can buy one property right now,
Okay.
and pretty much make three other suites out of it.
Should be like 12A, 12B, 12C.
I don't know how they would number that.
Okay.
Amazing. Okay.
There's so much like this again. Like I said earlier, I need to look. I haven't dived
so
into
they
this.
haven't released.
That's coming in January.
That's coming in January.
But essentially, this is the general idea of what's to come.
Yeah.
Roundabout way. So in January, we should touch back on this when it comes into effect.
There's this one and the CMHC one that we should do.
the CMHC MLI program, which
That's gonna be a lot of fun.
is huge.
Yeah.
That a lot of people don't know about, and a lot of people should learn about this
A
problem.
lot of investors are calling, reaching out, asking about that one because it's 5 in 1, right?
Minimum
Minimum, and that becomes insurable.
insured. All you need is 5%
Insured.
down.
Yeah.
You know what else is
Crazy,
huge, guys?
and they don't qualify by income, which is
It's all cash flow.
enormous.
Yeah.
It's all cash flow. So as long as you are cash flow profitable in the property,
crazy.
they will move forward with it.
I can't wait to talk about that one. That one's a huge one.
When are we going to talk about it?
After the new year, when we get more.
Okay, good.
We have CMHC coming to present to us. I know it's the holidays now.
They're going to come in the new year? Hopefully.
We're trying. I have to check. I saw the email last night. I just got to check my email and see when she's available to come and explain it. It's another program. Again, it's for 5 units in one. So you're buying a multi-unit dwelling, and it becomes an insured product. So you can put as a minimum of 5% down. It's backed by CMHC, and it's all based on the cash, all based on the rental program, like the rent. Like if the mortgage is $1 million, but you're bringing in 1.1, you'll get approved. As long as there's no
rent, right?
Rent.
Sorry, the rent.
If
Apologies.
all the apartments are bringing in, let's say, $5,000 in rental payments,
As long as there's a surplus,
right? Exactly.
Yeah.
Okay.
And the mortgages and all the other.
Gentlemen, we can talk about this for hours for sure because there's just so much to open up.
Yeah.
But there is something huge on our ledge there, and it's a company that was publicized by a lot of celebrities, and we're going to be talking about this tequila today, and it is
We have our Silver Patron,
Yeah, I call it piney.
Piney.
So if you're a fan of Sons of Anarchy, they drink this. That's their like go-to tequila.
No, oh yeah, we can take it out.
But the one character Piney, he's one of the original 6 members of the Sons of Anarchy.
Yep.
That was his like demise, I guess you can call it. Was that tequila? Oh boy, how much I despise that bottle.
So
I was expecting something a little nicer with all its wrapping and stuff. Just saying. Me. Okay, Danny.
to start, I mean, it's a Blanco tequila. It goes for $83 at the LCBO. You can find this for $73 at zine.ca. It is smooth, sweet flavors of citrus, melon, and cucumber with light pepper. And it is very good on its own or in use of cocktails. Me personally, if I'm having this, it's with cocktails.
So it's like the Grey Goose of vodka. It's equivalent. It's very brand name, yet it's not bad and it's not good. It's kind of right there.
Fair enough. I mean, Patron, I'm going to say, is one of the, I'm not going to say the oldest ones, but for us here in Canada, is one of the older tequilas. Back in the day when you were 19 years old, the tequila shelf was 3 bottles, 4 or 5 bottles. There wasn't the selection that you get nowadays, right? So the Patron was your main go-to if you wanted tequila.
That's
Well, for me, it was like the Jose Cuervo. That was more premium.
And now, okay, so then you had the Patron or you got Jose Cuervo.
Yeah.
Exactly. So
Yeah.
you had those two makes, and then, whatever they was, silver, gold, and
well,
blah blah blah. But
Danny, let's start right off with the appearance. I'm giving it 2 thumbs down. What are you saying about that? It's definitely 2 thumbs down. Like it's just an ugly bottle.
this is a tequila bottle.
Is it?
It is that I remember it as, right? Truly, like there's other bottles that have the exact same.
It's done its job. The branding on the Patron bottle over the years has done its job. You look at that, it's tequila. You don't have to put the label on it. You just know it's tequila. So
This is a numbered bottle, by the way. 25,235th.
That's a lot of bottles.
in a
See,
month, probably.
Why number it when you're that high? That's what I don't understand. Okay, so Danny, what are you giving it on appearance?
Truly, on appearance, I'm giving this 7.
Okay, that's fair. Now,
Fair enough.
flavor-wise, you've had this one.
Flavor-wise, I've had this many times. More when I was younger. I don't really go after the Patrons anymore. Patron was actually, it's been bought out. And
By who? Do we know?
I don't know, but I
Interesting.
know that the old owner now makes other bottles that are absolutely delicious. Where this one, I feel like it's gone down a little
Really?
bit. I don't know. That's my opinion. At the $83 mark for Blanco, I'm out. Giving this a 6.
Okay, so you're overall 6.5, 7.
6.5, 7-ish.
Okay, let's give Johnny the bottle.
Oh boy, oh boy, oh boy. This is the 1 tequila, 2 tequila, 3 tequila floor. This is, man, how many? There's some good memories, and there's some very bad memories that I don't remember. But I hear about the stories after. So I'll start with the taste. I don't like it at all. It's rough. It's tough.
It is.
Great for a cocktail though. If you want to mix this inside a shaker, by all means, make me like a Mexican mule, that would be okay. Like we had on the weekend, that was pretty
It's
good.
called the Moscow Mule.
But they have a Mexican mule with tequila.
Ah,
Yeah.
Yeah.
So I enjoy that. So this would be a great. I would use this in that mix. So as for the taste, I'm going to give it a 5.5 because it's not my go-to.
Okay. Lowest mark ever since we started this podcast.
I'm not a Blanco guy either.
Okay.
However, the appearance, you know what? I'm going to say this. I know I might get some criticism for it, but I love the bottle. It's done its job. This is
It's recognizable.
it's a tequila bottle. It looks like tequila.
Yeah.
Right. So I'll give it a 7.5.
Okay. And price.
For $83, you got to be out of your mind. This to me is a $55 bottle.
So
And even at that, I still think it's like you can buy a Gibson's whiskey for $40, you know, or a Crown Royal, Crown Royal
Crown
for
Royal's-
$45.
Crown Royal is terrible.
But I think it's great whiskey. For
I
like,
love Crown Royal.
Yeah.
Yeah. Okay.
like
That's another.
this is the equivalent. Like this is a mass production Crown Royal or a Canadian Club or like you said, Grey Goose. I think even Grey Goose I think is overpriced. So for the price, I think it's a little excessive. I'm going to give it a 6 on the price. So I'm going to give it
6.5.
6.5 overall. Yeah.
All right, boys. You know what to do now.
All right, guys. Thanks for tuning in to another episode of On the Couch. I was going to say another episode of podcast.
Another episode of a podcast.
Another episode of a podcast that we just happenly do on the couch. Guys, again, share the love. If you like the show, share the show so we can grow. Like, share, comment, please. You can find us on the podcast 23 on all streaming platforms. You can find us here at Your Nesta Financial. And I am Johnny Supa and Danny Cardozo. You can find him.
Mortgages by Danny C.
Until next time, guys, take care.
See you later.
Peace.